Okay, fantastic. So welcome everybody to today's webinar training, which is how to trade gold. That's our main focus with today's session as part of a series that we do with Binary.com with how to trade gold, how to trade silver, how to trade oil, and also, of course, the commodity currencies as well. Today's focus will be on gold, presented by myself, Phil Carr, at the Gold and Silver Club. So today's live session will be going through how to trade gold. We'll go through live market analysis, the 5 secrets to trading gold, silver, and we'll also go through a price forecast with both gold and silver, which have had quite considerable moves over the last week. So before we get into it, let me just introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading, as internationally respected experts are analysis and our opinions on the metals, the energies, the agriculture markets. They're routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. And over the last 10 years, myself and my team of experts, we have trained and mentored thousands of private traders from all over the world on our exclusive research-driven strategies. So for further information on our services, all you need to do is go to www.jointhelivetradingroom.com. I would also suggest to be kept updated with all of the latest commodity reports that we put out there and webinar recordings. Make sure when you're on YouTube, you also search for the Gold and Silver Club, and from there that you subscribe to the Gold and Silver Club, a YouTube channel. We've got hundreds of analysis videos on YouTube, and that way you'll be kept updated with all of the latest reports via the Gold and Silver Club YouTube channel. Okay, fantastic. So with that, let's get into it, and we'll go through the 5 secrets to trading gold. So the first secret to trading gold is being aware of central banks and essentially of major news items which are scheduled within your economic calendar. So you've got 2 really important news items which occur on a regular basis from the United States. You've got non-farm payrolls, which is the first Friday of every month. So we'll have non-farm payrolls next Friday on the 8th of March. And then we have the FOMC statement. And the FOMC statements are held 8 times per year. And there we look for essentially a confirmation with regard to future monetary policy and whether the Fed are going to increase interest rates or not. So there you have Jerome Powell, who actually was speaking yesterday and caused a fairly significant move lower on the dollar yesterday. We saw a breakout with platinum breaking out to 3-month highs. We saw palladium breaking out to all-time highs, and we've also seen oil recover quite significantly this year so far, up 25% off the back of some dollar weakness. Now, as the head of the Federal Reserve, Jerome Powell has more influence over the US dollar's value than any other person. His speeches, they're followed very closely by traders, and they present regular news trading opportunities. So you want to just have in your calendar the FOMC statements. They're very important, and they can often be a catalyst for major moves in the market. What you tend to see is you've got the FOMC statement, which that particular day, there's normally some really strong moves on gold, silver, on the US dollar, particularly if you see the head of the Federal Reserve, Jerome Powell, during the press conference, if it is dovish, which means they're less inclined to increase interest rates, you often see the dollar sell off and a breakout on gold and silver. If he's hawkish, which essentially means he's more aggressive with respect to future interest rate hikes with a view to increase the US interest rate. With that, you often see the US dollar build up momentum to the upside, and then gold and silver sell off. And then what you want to be aware of is, of course, non-farm payrolls, which is going to be next Friday. It's the first Friday of every month that is released. The reason non-farm payrolls is very important is the Federal Reserve, they assess the jobs data to determine whether the economy is strong enough to withstand higher interest rates. In fact, nearly always after the after you get non-farm payrolls on the Friday, later on in the session, you often get several FOMC members speaking as well and giving their comments about the non-farm payroll number. That's important to understand, because I get the question quite a lot that on non-farm payrolls is volatile as it is, because you often see some big moves off the back of non-farm payroll, but then also it's not the case that you will always just get follow through after non-farm payrolls. There's often quite a lot of volatility later on in the afternoon, and one of the key reasons for that is a number of FOMC members are giving their opinions based on the non-farm payrolls which occurred earlier in the session, and that can have significant impact on the markets later on a Friday, which is why quite often on a Friday after non-farm payrolls, you can often see counter trend moves later in the session, and in fact quite large surges in either direction as you get towards the close, as traders are just repositioning themselves after various comments from Federal Reserve members. So those two news items are very much in lockstep with each other. So non-farm payrolls correlates to FOMC and Federal Reserve and what they do in the central bank's intervention. So just be aware of that when you're trading non-farm payrolls. And that's really a secret to trading gold and silver. Those news items, they provide really great regular trading opportunities. Now, the second secret to trading gold is being aware of the gold-silver ratio. So we've had the gold-silver ratio towards the end of last year and the beginning of this year. It hit 10-year highs. Whenever the gold to silver ratio gets above 80 to 1, typically it is a great time to look to buy gold or silver. The ratio just gets too much of a disparity. If you go back historically over the last 20, 30 years, whenever the gold to silver ratio has hit 80 to 1 or higher, in fact, recently it got as high as over 85 to 1, it has marked a significant low for gold and silver prices. In fact, also, the platinum to gold ratio got to the most significant it has ever been. And over the last week or so, we've seen platinum break out by more than 6%. We've actually capitalized on that trade and banked profits today for 620 points. It's something that we've mentioned multiple times on the commodities corner, but buying back into platinum at $800 per ounce, and it's broken out to 870 today. So it's been a really big move on that market. So with the gold to silver ratio, what you need to bear in mind is it reached a peak above 84, 85 to 1 over the trade war tensions over the time of August, which you can see here on my chart. And basically since then, so over the last 6 months, we've seen gold recover by more than 9% to the upside. Silver is up 7%. Palladium, incredibly, is up over 60% in 6 months. It's almost like a cryptocurrency, the return, because you only really tend to see those sort of returns in the markets for cryptocurrencies. But no, it's happened on a commodity. It's happened on palladium. So palladium is up by more than 60% over the last 6 months since the trade war tensions got to their peak in August of last year. And the ratio, the gold to silver ratio, just bear in mind, if you're taking any notes, when you're observing the gold silver ratio, and I can show you on Reuters very shortly, but you can find it on a number of major websites as well. Whenever you're looking at the gold silver ratio, whenever it gets especially above 85 to 1, it normally represents a good time to buy gold or silver from a longer term investment point of view or a swing trade. But typically, historically, whenever it's been above 80 to 1, it's still a good time to look to be buying into the metals. So the gold to silver ratio, whenever it's above 80 or 85 to 1, for me, it's personally a buy for gold and silver. You can look at this in terms of the moves going back to around 2001 here. So approximately the last 17, 18 years. You'll note here, each time we got above 80 to 1, we've then seen a significant rally and a low get put in for gold and silver. Okay, so that's really important to understand if you trade gold and silver on a regular basis. The third secret to trading gold is seasonality, and we capitalize on something every year known as the January effect, which is basically where some of the best performance for the precious metals is over January and February. We've talked about it before, certainly on these webinars that we've been doing with respect to seasonality, and January and February tend to be some of the best performing months of the year for gold, silver, platinum, and palladium. I mean, palladium has been astounding. It broke out to all-time highs yesterday, broke above $1,550 per ounce. So palladium is now more expensive than gold, than silver, and also then, well, silver, not a problem, but platinum, it's not usually more expensive than those metals. In fact, if you go back to last year, it was trading around the $800 per ounce level, and now it's trading as high as $1,550 per ounce. So it's overtaken platinum, and it's also overtaken gold, which is quite astounding. But at the beginning of the year, a lot of these moves in January and February are very tradable, and it's a cyclical move that often forms a low in the precious metals over mid-December and then leads into a opportunity to buy in at those lows and take advantage of the moves over January and February, with the caveat that normally we put in the top around the end of February and then we start to correct going into March. So today is the 27th of February. Tomorrow will be the last trading day in February. Friday will be the first. The expectation is we might start to run out of steam here for the rally as we get towards the end of the week. And then as we go into March, normally gold produces a negative return of about minus 1.5% over March. So I'm not necessarily expecting a lot of upside on the metals as we go into March. We may still see a bit more uptick in price between now and the end of the week because we don't have non-farm payrolls this week. We actually have it next week. So I could see maybe a bit more momentum and a retest for about the 1330, 1340 range for gold. But then the expectation is we'll follow the seasonal cycle and then gold will start to correct as we go into March and April. And the fourth secret to trading gold is, in my opinion, being aware of major central banks, but not only the US central bank, being very aware of the European central bank as well. The reason I say that, and it's a bit of a running joke at the Gold and Silver Club, that Mario Draghi, the European Central Bank announcements and his press conferences, he's basically a gold killer. So he tends to kill any gold rally. So when Mario Draghi delivers a press conference next week, you'll have that from about 1:30 London time on Thursday. And also bear in mind, you've got Friday non-farm payrolls. I'm expecting that to be almost a double knockout for gold. So you're going to get the European Central Bank announcement on Thursday, which is normally bearish for gold anyway. And then you've got non-farm payrolls the following day. So any volatility, any chance to really cause a potential flush out on gold, you've got two opportunities for central banks to do that. So you've got FOMC members that will speak later on in the session on Friday next week, but also the European Central Bank on Thursday. So the way I would look at it is any rallies on the metal. So basically we booked our profits on platinum today, which is starting to pull back a little bit. So we've taken profit for quite sizable, actually, 620 points. We banked profits on gold over the course of the last week. We have also come out of our silver profits as well. And we've just got a position on right now at the lower end of the channels at the moment for gold, where I'm looking for a brief bounce from oversold conditions around the 21 MA, which I'll show you on the chart. But I don't want to hold that trade for too long. It's just a short-term day trade, in my opinion, at the moment, with a view to start looking to reposition as we go into next week. So be aware of European Central Bank announcements. Mario Draghi tends to be a killer of any gold rally. That will be next Thursday at 12:45 will be the base rate, the rate, and then you'll get, which isn't expected to change, but then the afternoon is the European Central Bank conference, and that's where Mario Draghi will normally get a grilling. Lots of questions will come through. He'll initially give his statement, and then during the quick Q&A, questions and answers, is normally where you see a lot of volatility. The fifth secret to trading gold is being aware of the US dollar inverse correlation with gold and silver. So basically, I'm sure you're aware of this, but for the most part, we're trading gold and silver priced in US dollars. It's XAU USD or XAG USD for silver, XAU USD for gold, or it's just generally known as gold and silver, of course, on most platforms, including binary. But you're basically trading against the US dollar unless it specifies on your platform that you're trading in pounds or euros or Australian dollars or New Zealand dollars. Otherwise, it defaults to being priced against the dollar, and therefore you have a very direct inverse correlation with US dollar. If US dollar rallies like it has been doing today, it's been going up to the upside, recovering a bit after the sell-off yesterday, it puts pressure on gold and silver. So if the US dollar goes up, gold and silver sell off. If the US dollar goes down, gold and silver go up. So basically, I'm always watching the US dollar on my screen when I'm trading gold and silver. I've got it right now. I'm looking at the US dollar versus gold and silver, so I can see what the inverse correlations are right now. So that's a great way to be able to track gold and silver. If the US dollar is breaking out and gold and silver are looking like a bit vulnerable to a corrective move lower, expect it not to be for too long until they do actually break down. If the US dollar was breaking out and vice versa, if the US dollar was selling off, you'd expect gold and silver to then break out to the upside. So that gives you really the 5 secrets to trading gold and silver, which will help you get a bit of an edge in the market when you are trading those commodities, in particular for gold there, which is the main focus. And gold's actually pulling back a little bit at the moment. So what we'll do, we'll have a look at that on my chart. So just go through the narratives right now in the markets, and I'll just bring you over to my screen so you can just see exactly what's going on in some of the top news items with respect to gold and also the metals at the moment. So just bear with me as I bring that up for you. So I'll just share my screen. You should be able to see that very shortly. Whilst we're waiting for that to load, what I'll do, I'll just go through some of the fundamental updates to just doing a screen share with Reuters. It's taking a while just to load up at the moment. So just to give you a bit of a rundown of the narratives in the market right now, we've got at the moment the dollar drifting higher from 3-week lows, but confined to ranges right now. So the dollar is essentially rising off the 3-week lows. That's important to understand because the dollar did sell off quite significantly yesterday, and that created quite strong support for gold and silver. So the dollar at the moment on Wednesday, it has found support off the 3-week lows, but traded within a narrow range as investors showing no inclinations to make big bets. A day after the Federal Reserve Chairman Jerome Powell emphasized patience on raising US interest rates. So that's really important to understand. I'll show you that very shortly when we go over this. Screen share here should work this time round as I just share. Just a quick check-in again. You can see my screen okay this time round, and you can see the charts okay as well. Yeah, great stuff. Thanks, Sharice. And we'll just see if we can get it over to the narratives there as well. Yeah, there we go. Okay, that's working now. Good. Right, so yeah, just to give you a bit of a rundown at the moment, the expectation is that we found a bit of support here today with the US dollar. So it has been able to springboard off those 3-week lows. And gold has been under pressure. It broke down to about 1,316 US dollars per ounce. However, it might be that buyers come back in. If you look at gold on the weekly, we've come back into a major zone. And it might be that we do actually get some support. It really depends on whether we bounce from here, whether the dollar rolls over again, whether traders are more interested in the overall tone of the Federal Reserve, and whether that means the dollar is just going to roll over after bouncing today, and whether it's going to turn up to be a really good buy opportunity for gold here because it's back within the lower end of the range that we've been looking for this week. So we've got gold at the moment falling to 2-week lows. So a lot of traders and investors who potentially missed some of the rally over the last couple of weeks with gold, bearing in mind that gold is up 9% in about 6 months now, they might be looking to buy in at the lower end of the range, sub 1320. So now I'm watching out to see whether we will get some sort of a buyback. We've also seen the pound US dollar today rallying to the highest level in 7 months on Wednesday as investors are ramping up bets that a no-deal Brexit was less likely and that Britain's departure from the European Union would be delayed. So we've seen certainly a lot of strength come into the pound US dollar. We've definitely seen weakness on the US dollar index so far this week, apart from a bit of a bounce today, but certainly we're seeing strength come in to the pound US dollar. And that's quite important with respect to some of the flow that we might see over the next couple of days. So with that, let me just take you over to the chart and I'll show you just some lower time frames as well, which I've shown in the past as well before. So I'll just show you this so you can have a look. So we've got gold here. Let's just bring out gold on the weekly chart, go higher time frame. And you can see here basically what I would look at, although it's getting a bit of a reversal right now. This was a major breakout point previously around 1318 to 1319. In fact, we traded that whole breakout up to 1345. And we're getting a bit of a pause now, previous level of resistance providing some support. What I would look at is the lower time frames. You look on the hourly there, we come back towards our hourly Keltner channels, finding support at the weekly pivot, a little bit of support coming into gold. I would imagine that there will be, and this is where we've actually got a position on at the lower end of this zone, I would imagine that you might get some traders looking to buy back into this pullback on gold today if the US dollar starts to run out of steam a bit. If we have a look, in fact, at the US dollar, you can see the reversal on the US dollar and the bounce higher. But overall, if you look at the US dollar and you bring that out on a weekly chart, it still looks vulnerable to more downside. And I look at the daily chart as well here. The dollar looks like it's getting a bit of a bounce today, but it could easily roll over again tomorrow. So this is the dollar index on the hourlies, back up to the weekly pivot, but could roll over and pull back again. So what I'm looking out for now from an intraday point of view is to see whether gold will catch a bid here. It's back around 1320 at the moment, and see whether gold rotates back to 1325 and then 1330, and if it does, whether it starts to catch momentum. Normally what you see on gold is these pullbacks are used as opportunity for liquidity and for traders to get filled on their limit orders. So if you're an institution or a fund, normally you don't want to buy into gold and FOMO in when it's breaking out. You prefer to buy back in at lower prices. So sometimes what you tend to see is these pullbacks actually create liquidity and they create large moves to the upside. So I'm looking out for that on gold. Because today's session is, of course, very much focused on how to trade gold, I would keep an eye on this on lower time frames. We're at the lower end of the Keltner channels, and I want to see whether gold will hold around this 1316 to 1320 zone and make a rotation back towards the upper end of that channel, which resides at about 1330. If we then break above 1330, I would look for a rotation back to 1340. This then brings me over to platinum, because basically we banked profits on platinum today, 620 points. It's been an immense move here, and it's been perfect in terms of what we discussed a number of times on the Commodities Corner from those of you who follow us on there. You can go back to our week ahead reports and even the commodity reports on binary.com as well that we've given, and we've discussed a number of times where essentially platinum, you want to look at potential buy opportunities at that $800 zone. Each time platinum has come back to the 800 zone, it has provided a really good area of support and often a really nice area to look to get back into platinum. Every time it's got sub $800, it's really represented a good area of value. Between 800 down to around that 780 zone has really been a great area to pick up long positions, either from a longer term investment point of view or just from a trading point of view. We've personally been buying. This is the third time we bought back in at the $800 level or lower since the beginning of January. But this time round, we actually caught the whole breakout, because on previous times we trailed up our stop loss, came out and then bought back in. This time we never actually trailed back to our trailing stop loss. So a trailing stop loss works in the sense that as the price is breaking out, you move your stop loss higher with the view that if the price comes back down again, you just come out with your trailing stop loss at a higher price. However, this time round, we've continued to trade up our stop loss as the prices continue to break out to the upside, but it's just continued to go up all the way until it actually hit our profit target today. And that has now taken us out of the trade, banked our profits. You can see we've come all the way up towards the upper end of that swing high. Now, platinum is up 6%, and I would say it's completed the move for now. It's back at that resistance level, and we've discussed this. If you go back to the last couple of weeks of commodity reports that we've put out there on YouTube, we identified that as a great buy opportunity based off the weekly when we got that breakout. In fact, we closed strong last week, and we just continued to break out higher this week, and it's netted us over 600 points to the upside. I would say in terms of trade ideas right now, do keep an eye on gold on the hourly. I would also potentially look at a correlation here with the Australian dollar, US dollar. So for those who are intraday trading, I quite like the way that the price moves between the 1 hour Keltners. So it can be very useful in order to look, as long as you're with the trend on higher time frames. And I would suggest gold is still within the upward trend right now. Australian dollar as well. We come back down to the weekly pivot around the 0.713 handle. I quite like that if it gets supported overnight and tomorrow. It's at the weekly pivot, the lower Keltner channels. It's got a bit of pressure to the downside off the back of US dollar strength today. But ultimately, if we do hold at this zone, it could see easily a rotation back towards the 0.72 handle. That's what I would be looking out for on Australian dollar, US dollar. So I would keep that on your radar as well for a potential opportunity from a correlation point of view. We've discussed that quite a lot during the Commodity Corner and Currencies webinar presentations, the correlation that Australian dollar does tend to have with gold. Another market I'll put on your radar right now, which you've actually got a long position on, is the S&P 500. So the S&P 500 just pulled back earlier on in the session, came back towards the lower end of this zone. It actually filled the gap that it created earlier on in the week. It pulled back, but now, I mean, it's trading near enough for the daily highs here. And in fact, if I just show you from a intraday point of view as well, it's come back down to our buy zone today, hit the lower Keltner, spot on, found support, and it's rallying back towards back above 2,793. I'd look for a rotation back towards 2,800. It's filled that gap. Look at that gap there, which was created from 2,793 that sold off during the Asia Pacific session. It's now filled the gap. I'd look to see whether we can get a breakout and come back towards 2,800. I still like this overall upward trend on the S&P 500. And in fact, I've got a position on it at the moment. So I'm long at the moment on the S&P. Also, bear in mind, crude oil, the oil inventories data today showed a drawdown, and as such, that's been bullish for oil. But overall, a bullish breakout like that on oil would also see more optimism for the S&P 500. So I would expect that to also lend further support to the Dow Jones, the S&P 500, because of the oil companies within the S&P 500 and the Dow Jones. Generally speaking, when oil is breaking out and rallying as it is doing at the moment, it does provide additional support to the S&P 500. Also note, where a previous level of resistance found support as well around that 56 handle. You can see we just about broke down to that level this week. We discussed that on the week ahead report as well. Any pullbacks towards that zone would be buy opportunities. That's further been confirmed today by the oil inventories data as well. So oil looks to be full on back in bullish territory. I am in fact targeting $60 per barrel on oil, and pullbacks to be perceived as buying opportunities in my opinion right now. So really my favorite trade ideas at the moment, let me just talk you through that because today's focus is more on the commodities. Let me just talk you through and just remind you again. So basically platinum, we banked this trade. We banked the trade for 620 points. We're out of this trade. It's completed now. We've been in this trade for about 3 weeks or so. It's the third time we've been in the trade since the beginning of 2019. So we banked that for 620 points. In fact, that's exactly what we put out there on our updates today. And a lot of our traders caught that entire move at the Gold and Silver Club. And that's fantastic because that's completed the move for us now. It's delivered the way it would normally do so in terms of seasonality over January and February. That's worked out perfectly for us. And it's a trade opportunity I would look at time and time again, going back to next year as well over January and February. So platinum has been great. Gold. Now, gold is decision time really. On the lower time frames, the hourly is catching a bid around 13.20 zone to 13.16. I want to see if we get follow through between now and the end of the week, essentially. I'm not expecting gold to be very bullish later on next week because of the European Central Bank announcement. But for this week, we might have a little bit more to go. It depends whether it does get supported here. So gold on the radar at that 13.16 to 13.20 zone at the moment. Then moving over to oil. So I'm still bullish on oil. I'm expecting $60 per barrel to get hit. Previous level of resistance is providing support. I'm also long on the S&P 500 at the moment as well. We'll go over to the daily chart, and we've got a long position on the S&P right now. I'm expecting the potential for a retest back towards the swing highs, breaking back above 2,800 this week. And I would also keep an eye on the Australian dollar, US dollar as well. It's come back towards the midpoint there, 0.71 handle. That to a certain degree will be dependent on whether the US dollar rolls over again this week or whether it gets supported, and whether gold breaks out. If gold does find support and breaks out, I'd expect support to be found for the Australian dollar, US dollar, and vice versa. If gold sells off and doesn't find any support at 13.20 to 13.15, it would also put pressure on the Australian dollar, US dollar as well. And I'd look out for that inverse correlation. So I hope that helps, guys. I hope that gives you a bit of context into really how to trade gold, the 5 secrets to trading gold. As I mentioned at the beginning of the session, do make sure if you want to be kept updated with the latest webinars that we put out there and also the latest reports on YouTube, make sure you just go to YouTube and search for the Gold and Silver Club and subscribe to our YouTube channel. Of course, if you do actually want to become a private member of the Gold and Silver Club and join our community of successful traders, you can do so very simply via the following link, which is www.jointhelivetradingroom.com. As a member, you get access to exclusive live trading room webinars. You have access to real-time trade alerts, trading research, and market insights. You get access and you get your login to the Private Members Academy website, and you get access to support and one-to-one mentoring as well. So all of that is made available to you by being a private member of the Gold and Silver Club. Okay, and here is the link again, guys. It is www.jointhelivetradingroom.com. Okay, fantastic. So with that, thanks again to Sharice and the team at Binary.com for hosting today's session. And I hope that helps, guys. I hope that gives you a bit of clarity with respect to how to trade gold. We'll certainly catch you back here on the next one. So Friday's Commodities Corner. I wish you all good trading. Enjoy the rest of your day. And we'll see you on the next one, guys. Okay, so all the best for now. And we'll speak to you very soon. Okay, take care, guys. Bye for now.